significant, but it's put me to sleep. Steve's talked about this for a long time. Why trade yen? But we are on the verge of this could be a major breakdown of a descending triangle. And it measures pretty big from 107 to 11 and a half is 4.5. It's going to take it to 102.50. Now, what's down there at 102.50? So, when you look at this, it sure looks vulnerable to me. And, I don't know what it basically is saying. Maybe, the dollar is strong, maybe a flight to quality. None of the yen correlations that I used to watch are really working, because you would have thought the yen would be up with the S&P's up 25 handles, and Blake's pointed it out. It didn't do anything with risk. It really isn't doing that much with gold, right? So yen's down and gold's down today too. And then we'll see, maybe what it's saying is rates are going to head down one more time. Again, I look at the 10-year note. Pay attention to it, because this week it's not going to take much to have a 2-week reversal. In the note, all you need are closes over 65. That's 5 bips. And here's your 30-year. By Friday, back over 127.10 is going to be a 2-week reversal. So any questions on anything I covered before I turn it over to Blake? All you gold bugs, definitely pay attention to this level, 1708 in the gold. It's going to be important and would be the first sign of it rolling over. Yeah. Yeah, try it, Rick. Yeah. I have to do it sometimes. Yeah. All right. Well, you're welcome. All right. So I'm going to bring Blake in. Blake, how are you? It was like an oven here in San Marcos, so I could only imagine that you're running the air.
You said it's what?
It was like an oven here this weekend.
Oh yeah, it's getting warm over here too. Yeah, it's it's definitely it's definitely
95 here, 100 here in San Marcos. So
oh wow, that's hot. Yeah, we're over 100 now, so it's no fun.
Yeah,
no fun.
So you have stayed home from the virus and stay inside from the weather. That makes
it's the whole virus thing. I mean, for us has been it's been a kind of a I don't want to say a blessing, because that's the wrong word, but it's it's been fun. We've been enjoying the weather, distancing, but being out and about, and now we're really confined.
Yeah.
so anyway, it's been kind of a slow open. I came into I went into like last week, and I was bearish is, the equities were rejecting. We're looking like this, head and shoulder pattern was going to play out. And the fact of the matter is the equity markets aren't pulling back. Now, that's not to say that they won't pull back. They're not pulling back. And, we're pulling back only to a 38% retracement, which is a shallow retracement as it is. Right. So the thing is I'm a little concerned that this market might have some more juice left in it, if you will, and that's and so
a lot of major earnings reports. I think a lot of the FANGs this week, Blake, are reporting.
Yeah, and maybe that's the case, but that is a driver. But I'm taking a couple of things into consideration. First and foremost is sentiment. Sentiment is from most people are we're heading lower, which I think we eventually are. But near term, when I say near term, I'm talking like this week. We might actually go a little higher. The fact of the matter is the market's not pushing lower, and I think a lot of people have missed this rally. and you have institutional money going into the end of the month that really they've got to be, they've got to put money to work, and like I said in the week ahead video, it's more systematic, and it's not like, it's not based on anything more than I have to be, involved in the markets. And so I'm thinking that the S&P might actually hit the 618 retracement above these highs. And I was worried about that going into this weekend, and here we are, blasting up towards highs. And frankly, if we break 2,900, we are going to 2,930, and quite possibly even to 3,000. And I think that that is now the overarching risk for the equity markets, is that even near term, the market does the unthinkable and continues to squeeze higher. So the underside of this trend line is going to be very important, which is also the previous high, which comes in around 2,900. And I think that's what we have to watch this week. And like I said, the chances of us, pressing even higher than that previous, the 618 retracement, you have to imagine this is also the breakout point from way back in the end of 2018. That was really key resistance. And I have a feeling that, we're going to be trading there, maybe even above it, as we squeeze the market a little bit. So I'm, very, very hesitant with being bearish at current levels. I really am. Now, as far as the Aussie goes, look at the Aussie. We're at new trend highs. We're challenging the 618 retracement right now, the long term, and the Aussie looks like it can continue to, 66 cents, 66.70. I mean, and that all that previous support. I know I covered all this during the week ahead video, but um, that looks like the risk. I had a short Aussie on, and I took it off. As soon as the equity markets open this weekend, I covered that. I'm just not comfortable with it because it's not pulling back, and the fact that we're not pulling back leads me to believe that we're probably going to see continued higher prices in the Aussie, and that is, I think, the overarching risk. It's not are we going to sell off? It's, can we continue to squeeze higher? There's a lot of hope and a lot of promise in the market, and I believe that the market will continue to trade off of these hopes that things are going to continue to get better. And I think they are. I mean, if you look at the numbers, it looks like we are. When I say the numbers, I should reference the COVID-19 numbers globally. And you even have Italy that's going to start easing restrictions the beginning of May, and Italy, one of the hardest hit places, they're going to be opening back up slowly. Now, you can argue and say, well, we're going to have a resurgence. We're going to have a second wave. We may, and that may be the case, but it's too early to tell. Right now, the market's riding high on this on the positives, and so with those positives, it's going to continue to bring and usher in my opinion, dollar weakness, at least through these commodity currencies. Now, one of the things that's happening this morning, if you guys have not seen, is crude oil is back under pressure, and I've heard Paulie say this in the chat room, and I hear other people reference this too. Um, Crude's really telling us the story, and maybe it is, but I don't know. Maybe it's also telling us that the markets are going to enjoy um, weak energy costs moving forward, at least in the near term too. So but man, I tell you what, crude is weak, and we are back down towards our lows. The rallies in crude oil, very, very small, very shallow. And I think everybody was getting bullish crude down here, and you can see it's rolling over again. Now, will we hit new lows from here? Well, in the front month contract, we might, because if you watch what happened in the last front month contract, you're probably like, shoot, I don't know if I want to own the June contract right now because of just lack of storage. And it may not even be a demand issue. It might just be more of a lack of storage issue. So crude, again, has continued to be weak. And what's not responding to that is the dollar Canadian, which I find really interesting. And the dollar Canadian, if stocks continue to press higher, this dollar Canadian, I think, is at risk of breaking lower. So these are, things I'm just kind of paying attention to, and I'm trying to be cautious at these levels, but I also want to approach the market with an open mind that that equities can continue to recover, and at least near term. Remember, we are heading into May, and sell in May, go away, I think, is a very real. It's a very real seasonal um, uh, uh, mechanism in the market from a seasonality standpoint. But sell in May, go away doesn't necessarily mean sell May 1st and go away. I mean, we could be talking, mid to late May, and you could have equities that could do one of these. We hit 3,000 before rolling over again, and that's entirely possible too. So it's not like, oh, it's May 1st, we got to sell stocks and we got to start shorting the market. That's not the case. If it was a calendar event, then we'd all be gazillionaires. But it's not the case. It's just around these times we have to start being a little bit more careful with being on the long side of equities over the next few weeks. So that's just some food for thought. So what I thought I'd bring in who I thought I'd bring in really quick and see if there's any comments from Stelios that he's got that of events that have happened over the weekend, especially with like these unfound rumors of Kim Jong Un dying. So what's up, Stelios?
Well, first of all, about the supreme leader, I don't think anybody knows apart from them. So I'm not going to comment on that. The main issue, like you correctly said, is countries reopening, economies reopening, which is theoretically is a good thing, but in practice there are many risks, and obviously the obvious reason is what happens if the number of cases start climbing again, because people are going to be going out and interacting. I think an interesting thing is also, let's say the economy opens tomorrow, and which means that businesses will have to start employing people, and you have higher operating costs if you are in business rather than if you're locked down. So you have restaurants or whatever starting to open up, their operating costs start going up, and their customers are not going to be anywhere near what they used to be before. So you see all these business owners shouting, oh, let's open up, we need the business again. And I think initially we're going to see their costs going higher because they're going to have higher operating costs but lower income. So that's a danger that I don't think people have been talking enough about. And for me, opening up economies, I think, is a little bit too soon, because you don't know how things are going to evolve. But then again, at some point you have to. So my view regarding equities remains the same. I still think we're going to be going lower because the effects, everything is telling us that equity should be lower in terms of valuations. Companies are going to be, people are losing their jobs, companies are going to start failing, and we're not going to be even close to where we were before the outbreak, at least for the first 6 months, I think. So I think equities are a little bit ahead of themselves. I think they have got a leg lower. I'm not short, but I put in my bids quite a bit below here, and see what happens.
Okay, so now I'm not sure if you were listening in and heard what I had to say about a lot of institutions kind of chasing each other and just being involved in the markets. They have to be involved in the markets. How do you feel about that phenomenon? Because I do think that that's a real issue in the markets right now.
Yes, it is. You're absolutely right, and I don't blame them. I think overall, in a horizon of I've said this before, 12, 18 months, I think we're going to be higher, quite a bit higher actually. But I like to try and catch trends and moves. So I think we're going to be going lower first, and a lot higher afterwards. That's my view. But yeah, I agree with your point. I think that's definitely a phenomenon which is happening.
Yeah, I think the fact is we're running out of time. The pullbacks have been very minor in equities, and like if you look at just this last move, this is the if you take this like last move here, we barely pulled back 38% of this move. So when you're only pulling back 38% retracements, that means that there's usually it's a
It's a
strong
one-way market.
characteristic.
It's a one-way
Yeah,
market.
of a in this case a bullish or very lack of continuation type of move. And what I've been waiting for in the same light as you is just waiting for a break below this 2700, and I was going to be pretty aggressive on the short side, but it's just not materializing. And because it's not materializing, I think you have to imagine that people are like, oh crap, this market is not pulling back, so I have to be involved, and I have to get long. So
Yes.
now that's kind of like the thought process that I went through this weekend, and I'm with you. I think that the market does go lower, but can we go higher in the next couple of weeks before we start heading lower? And I think that's probably more of the situation right now. And I think that's what we have to be kind of aware of. One of the other pairs that I'm looking at that's kind of tipping me off right now to that is look at the dollar mex. All right, here's the dollar Mexican peso, and I don't know why all these alerts are old. These are old, and they need to be removed. Uh, you notice that we're heading back towards trend highs, but we're stalling at like this, in this case, the 78% retracement, which means that we might actually make a lower low or a lower high, excuse me. In a currency pair like the dollar Mexican peso, which is an emerging market currency, if those start strengthening again, or we start seeing some peso strength, that's another indication to me that equities are probably going to at least push higher near term. And then obviously not just looking at the dollar Mexican peso, but the Turkish lira is probably one that you really have to pay attention to that, and the rand. If those start strengthening here, then that's an indication that stocks might actually push higher if these emerging market currencies can actually show a little bit of strength. So just some things I'm thinking about. What do you make of this move in crude there, Stel?
Yeah, I mean, I think as long as the underlying conditions don't change in terms of the supply and the amount of available storage, we're going to be seeing the June contract do probably not the same shenanigans of the May contract, but I think it's going to be going close to zero again, right? I mean, it's at the end of the day, when we have these conditions, like we wrote on our blog post, it's just a number. It doesn't actually mean anything, past a certain point. So I think it's gonna become quite a bit more volatile as we go into expiry.
Right.
Actually, speaking, go on. I'm just gonna mention something afterwards. What were you gonna say?
No, I was just agreeing with you.
Yeah. Okay. One last thing I wanted to say about equities. I forgot now. Hold on. What was it? Oh yeah, I think what we're seeing now is exactly what we were seeing in February and March. And if you remember, we had this outbreak starting in China, and we could kind of understand how important it is because we saw the reaction of the Chinese. They were locking down areas of 50, 60 million people. And we knew that this is going to be not another seasonal flu or whatever. It's going to be a bit more serious. And yet, until the 20th of February, the S&P was doing all-time highs. And then we had a little drop to like 2950 or so, I can't remember exactly. And then we rallied again to over 3100. This was in early March. And now
right.
full-blown outbreak, right? We knew what this was, and yet equities were completely ignoring it. I think this is what we're seeing because of positioning, because of people not wanting to miss and to be out of the game, and they want to have some, something in equities. And I think it's for me, it's too early, but I think this is what we're seeing again.
Yeah, I think it is. It's a story of positioning more than anything, is what it is. And I agree with that. And it was amazing that we were rallying back here too. We were like, we're all sitting there scratching our head, going, "Wow, I can't believe that's happening." Yeah. So anyway, I think we're in a very interesting situation. I think you have to be very careful here. Trading around these levels, and it's not cut and dry, I don't think. And that's, I think, the risk that we see to the market. So, well, guys, I'm gonna actually bring in Steve, and so he can take over here. Good morning, Steve.
Good morning.
How you doing?
Good, fine. You?
Good. Just, we got a big week this week.
We do.
Yeah. So if you guys have not, I know most of you have, but if you haven't, then you have to get signed up this week. We have our Traders Summit that's on Wednesday and Thursday. I believe I'm speaking on Thursday, if I'm not mistaken. There's a end of day one, and I think my Thursday, let's see, yeah, I'm speaking at 10:45 a.m. Eastern. So on Thursday, it's a really, really, in my opinion, it's going to be one of the best events because of the group of speakers that we have, but B, because it's a perfect time to be talking about all the topics that we're talking about. So I'm going to make sure I put the link here in the chat box. So if you guys haven't signed up, there's the link. And Steve, how's it going with you? What are you thinking this week?
I think that the markets might continue higher. We said since the middle of last week that what seemed like an initial reversal lower in the vast majority of commodity currencies and stocks then seemed to look more like a consolidation. And that makes me think that perhaps I reversed a little bit too early. I think we might see 29.30 in the S&P first.
Yeah, I mean, look at this Aussie dollar. I mean, it's at new trend highs.
Kiwi, more or less the same type of pattern. So yeah, it seems like a lot of people are trying to fight this for all the sound fundamental reasons, but this is not a move that is based on fundamentals anyhow. So, nobody, at the end of the day, nobody will give you some type of a prize for having the right ideas. The market rewards you only for being, on the right side of the market.
Right, exactly. So, all right. Well, I want to say happy Monday. I'm going to pass it over to you guys. Coach, have a good interview today. Steve Stelios, have a good next 30 minutes and the rest of the day, obviously. And everybody else, happy Monday to you. I'll see you on the daily roundup in a couple hours.
Thanks, Blake.
Thank you, mate. Bye-bye.
Thanks, guys.
Thank you, Blake.
Good morning, guys.
Good morning, Coach.
Morning.
How was your weekend?
Pretty good. Watched a lot of TV.
Is it already so hot over there?
Yeah, it got hot. So,
oh, man.
And they closed our pool here where I live. I would have thought that the chlorine in the pool would have made it safe to, use the pool.
You confuse chlorine and chloroquine.
Oh yeah, but bleach. Yeah, that's a good one. But bleach, chlorine, and that it'd be safe. But
if you drink enough, you'll be safe. Yes.
If you drink enough of the pool water.
This is a joke for people who don't get it.
Yeah.
We're not advocating you drink that.
Yeah.
Well, the kind of stay-at-home orders we have in the U.S. I heard news commentator use the metaphor that it's kind of like you can come into our pool, but you could only pee in one section of the pool, with different states opening up earlier. But wouldn't you think? Are you guys? Can you use your pools there in Greece?
Nope. Everything
Huh.
is still in lockdown,
Yeah.
although they are seriously making plans of starting reopen the economy and everything else. The problem hasn't gone away. That is more than obvious. Greece has done amazingly
Yeah.
so far, having to do with
They have.
we're very, very low in deaths and people that have contracted the disease. But unfortunately, as I was afraid since the beginning, this is a great plan if you had some kind of a war chest. If you had
Yeah.
a big pile of money sitting on the sidelines
Yeah.
and could afford
ride
going
it out.
forward with it
Yeah.
and ride it out for a few more months. And because in a few more months, you might actually have at least some kind of a decent treatment protocol that will, reduce whatever side effects that cause people to die
Yeah.
on occasion to
Well,
not do that.
it's so disjointed here. Here's an example. This is beach weather, right? Okay, so they opened the beaches in Ventura County. So you saw cameras of everyone there. But in LA County, they're all closed. So what happens? You just get in your car
and you go
and
there.
you drive
And
15, 20 miles.
which makes it even worse because
Right.
Instead of people, for example, spreading out in all those counties, they
Yeah.
will end up going to swim on the same one. Yeah,
Yeah.
I know.
Very
I know.
disjointed. Anyway.
I know.
Okay, so how do we make money this week, Steve? What are you thinking? The dollar looks kind of heavy, don't you think?
That's the big question. The dollar looks kind of heavy. Yes and no. Meaning, depends on what your time frame is.
Yeah.
If we're talking about a very short-term time frame, so for example, if we want to go to, let me.
Oh wow, you have a big rally coming after this pullback.
So if we go down to the 4-hour chart, right?
Yeah.
So if we go down to the 4-hour chart, somebody can say, oh, we got rejected again from that previous high. So we might see at least another pullback towards that area. Why that area? Because somebody can say, this looks like, let's draw it like this. This looks like a nice rectangle.
Yeah.
There it is. Okay.
Right. First
and
leg
perhaps,
down and ABC for 2.
Yeah. Perhaps we can even break further down from there.
Yeah.
And then perhaps produce something like that, you name it.
I get the feeling you're looking for one more blow off in the dollar.
Yeah, I am.
Okay. That's a little different
and that can coincide
bias
with
than you've had for a while.
Sorry to interrupt. That can
Go ahead.
coincide with an equity drop, just
Sell
like
off.
it did. Just like it did a couple of weeks ago.
Okay.
Yeah.
Got it. All right.
Now, if you're looking at a daily chart, though, or even if you look at the 4-hour chart by zooming out, I mean, what I see here is the absence of trend. So I don't see a trend here. I see the absence of one. So in essence, we're back to what we had for a long period of time, which is what? More or less a slow drift higher in dollar. Definitely there is no real momentum here. So I still strongly believe that this move is eventually going to fail, and it's going to fail in a spectacular way. But I think the path of least resistance on the pain trade would probably remain in the medium term to see a higher high. I think this market wants to trap more people being bullish before it can actually, clean out the table. You know what I mean? Take out all market participants. So, you see it in the Euro USD, you see it in the USD yen. Actually, the USD yen, and not coincidentally, it's the same kind of deal you see, for example, with yields. So if you have a look at USD yen, it's like, I'm not going to take into account today because today it's too early on the day. So as far as I'm concerned, we might close the day unchanged. So, disregarding today's price action, which is somewhat lower so far, just look at the previous 6-7 trading days. I mean, it's literally like USD yen got unplugged completely. So, which is the same deal as I said with yields. Check the 10-year yield. Here it is. I mean, so many things in the market have in essence locked down. I believe in a big part that's due to market participants giving up in trading them. In what sense? I mean, how many people, how many institutions have now given up saying, the hell with it. The yield curve now completely belongs to the Fed. I don't want to mess with it anymore. I mean, I don't want to play this game anymore. So, let it be, let it do whatever you want. And since USD yen traditionally is, quite sensitive, USD yen was traditionally very sensitive to what risk assets were doing and what yields were doing. The reason it was correlated with both, with one inversely, of course, and with one positively, was because the two other parts I mentioned, which is yields and risk, were also correlated with each other. But now we've seen, and I'm going to tie this very nicely with a question that came a few minutes ago, which was from Jason, which said, how do you price the stock market if fundamentals no longer matter? Also, does it even make sense for students to pursue degrees in economics with the rules of the game changing? Seems that you just follow the central banks and you can't lose. So coming back to that, because it ties very well with what I was just saying, we've now seen the USD yen having taken more of a decision to follow yields instead of risk, because yields and risk have now decoupled. Why is that the case? Because both of those markets are controlled at a large or a huge extent by the direct and indirect actions of regulators, which manifest through central banks and their monetary policy. Okay, now having to do with the question why you should pursue an economics degree, you shouldn't. But that's not because of what is happening currently. It's because economics they teach in universities, and I'm talking from experience here. So I'm not like, I'm not the guy that has no degree and hasn't taken any economic lessons in university. So, I want to dismiss university knowledge about that. The opposite has actually happened with me. Is because in universities they teach economics that are 100% theoretical and 100% out of reality. So in universities, they will still teach you things that have nothing to do with how a real economy works. It has some usefulness, I have to say, because it is useful knowing what are the theoretical models that those economists that are still sticking to, to their books, are following, and how they make decisions or they claim they're basing decisions on. But other than that, if you're not open-minded as a person, and if you don't want to do your own research, most probably you're going to get confused by what you learn in universities, and they can give you 1,000 different examples, literally, than anything else. Because 9 out of 10 universities teach you neo-Keynesian economics only, and that's it, nothing else. So now, having to do, I have a little bit of disagreement though on which part, Jason. It seems like the fundamentals no longer matter, and for the time being they don't. But something, the rules of economics do not change because of central bank action or manipulation. Meaning, Michael Jordan was looking like a superhuman that could fly, but at the end, gravity made its trick. Could he stay longer in the air than the average basketball player? Absolutely. Would he eventually land? Yes, he would. Same thing will happen in this case, meaning they've given that example in the past multiple times. It looks like they've defied the rule of gravity, but in the grand scheme of things, and if you look at time, as what it is, meaning a few years is just, a tiny marker in the timeline and the history of economics, right? In essence, they've done nothing like that. I mean, we're gonna pay in spades what they're doing now, which is in essence trying to ignore basic laws of economics, and the chickens will come back home to roost. And when they do, things are going to be much more nasty than they would be otherwise. So that's my point of view. I can confirm the one-sidedness of economic studies at the Hamburg University, says Ingmar. Yeah, economic studies is part of my institute, and we're currently debating this bias. I'm very happy to hear that, Ingmar, because unfortunately, you know how it is. I mean, students go to university, at an age that they don't have real experience in the markets. They haven't really witnessed how an economy works. I mean, the average university student hasn't even had a job yet nowadays, or if they had, it was like more of a hobby job. Their parents would take care of them mostly, and if they worked and made a little bit on the side, they could just spend it on doing more of their hobbies or a little bit more of traveling. Not in all cases, I have to admit, but in many of the cases. So in essence, people that have no real experience in the economy going in a university, so it's much easier to brainwash them with whatever you want. Much easier. Summit GMT time. Yeah, I'm going to answer that and then go back to the charts. So here are the times in GMT. You can see them here. So everything is on the page. Blake already put the link. Starts 8 a.m. Eastern time, which is 12 noon in essence GMT, right? And finishes 1200 hours Eastern time, which is 1800 hours in GMT. Okay. So now you know, and it's free to register. So you really, I mean, I seriously advocate that you should. I think it's going to be great. Steve, how do you see silver during this melt up? I think that silver is very, very undervalued if you look at the big picture. And I think that, during this decade that started this year, I think that silver is going to be a lot higher at some point. I mean, a lot higher. 3 times easily the price it currently has. Now, in the shorter term, if you're asking me, I wouldn't be surprised to see silver go lower after it looks like silver in the short term wants to produce another push higher towards at least $16, I would say. I wouldn't be surprised if I saw like a much bigger pullback following that. But in any case, I think that from any way you look at it, silver is still extremely undervalued. So I think that silver is a quite good investment if you're a patient person. What do you think about the USA Oil Fund with the restructuring and moving higher percentages to later contracts? Now, it makes sense that they would want to do that because they know that for the time being, short-term contracts are going no, that's wrong. What I was about to say, have a big chance, not they're going to, but have a big chance of getting decimated. Now, having said that, I believe that what we saw happening was a one-time event. And when I say a one-time event, it's not that I rule out it happening for 1 or 2 more months, but in the grand scheme of things, it's going to look like a one-time event. And I think crude oil, as long as any type of commodity that has intrinsic tangible value will end up moving a lot higher against the US dollar because all those assets are dollar denominated. So, enjoy these type of prices for as long as you can get them, because I think it's not going to be long. So if we want to have a look at the continues, which at least doesn't have all that noise, meaning contracts that can go negative in the very short term just before they expire, because it's like a hot potato. They throw you the hot potato. Nobody wants to be holding the hot potato because it's burning your hands. it doesn't mean that you don't want potatoes. It means that you don't want to be holding the hot potato, right? So if you see the contracts that expire in, further away, you'll see that all of them are roughly trading at $20, right? So the market, despite all that's happening, doesn't really see the actual value of crude dropping below 20, right? And I agree. I'm with them. If you remember, I was saying since we were at 30 something that I wouldn't rule out for oil to go even to teens. I wouldn't be that much surprised even if we saw like a very short-term print of like single digits. But in the grand scheme of things, I think that crude would move a lot higher following that. And I think that we are at that phase. Now, if you look at the continuous, which is much easier, excluding all that noise to, in essence, plot on, you can see that this was clearly some type of a pennant. So I wouldn't be surprised if we saw another little leg lower. But I think that, we're going to see at the very least a rather strong rebound following that. So I think you should be very, very careful being short crude because it can blow up in your face in a spectacular manner within a matter of 5 minutes. And I mean it. For example, look at natural gas today. Natural gas today at some point was almost 10% higher. Now, keep in mind that crude is still trading lower. Natural gas does not seem to want to stay lower. I think this is one of the divergences that will end up showing that, it was telling since some time ago. So, that's what I think about crude. Now, let me go back to the questions and address some of the FX. Let's see what we had. Fang announcing their Q1. What do you think? I think that some of the funds are going to do fine. Amazon, for example, and the market might find another opportunity to cheer about it. So I think in the short term, we might see more upside, as I said before. Let me see. More talking about JPY pairs, please. I understand what your question, and trust me, we were speaking a lot about JPY pairs, but the reason we've reduced the time we spend on JPY pairs is simply because the Japanese yen against the dollar has gone dead. So once you have USD yen doing almost nothing, that translates to the fact that more or less what, for example, the Aussie USD is going to do, the exact same thing the Aussie yen is going to do, right? So there's no point for me addressing, for example, Aussie USD and Aussie yen if USD yen is standing still, because when the cross rate is standing still, Aussie yen and Aussie USD, same type of price action, same price action more or less. So once we see USD yen come back to life again, which at some point it will, then we will have every reason to address separately the yen pairs. Until that happens, it's one and the same. It's like trying to describe one of my chicks and then, going again for the other one. I mean, it's the same thing mirrored. Euro USD. I already talked about the DXY. And, since we know that Euro USD is almost in inverse the DXY, and there's a good reason for that. DXY is 58% the euro. And if you add some strongly correlated pairs to the euro, like the Swissy, the SEK, etc., I mean, that percentage goes up to roughly 2/3 of the index. So, you saw the DXY getting rejected from the previous high. And here you see that on a daily closing basis, the Euro USD found support at the previous low. So, what one does, more or less the other is going to follow. So for the time being, Euro USD remains without a trend. And if you remember, I kept saying that again and again, and Gregor has been saying the same thing. I know it because he comes roughly once per week. So we exchange opinions, and he's been saying the same thing, find something else to trade. Unfortunately, I know that Euro USD is one very popular pair, and I know that many of you might have traditionally gotten used to trade it frequently. This is not the time to trade it because it's more or less doing nothing. So find other things to trade that you'll have a better chance of getting, a decent return for your money and not get chopped up in a market that is definitely without trend, right? Due to reopening of the economy and stimulus, EU companies report better than consensus results, short-term support for the euro. This week, the EU markets are more optimistic due to reopening of the economy. So Irina, in essence, says that short-term that might produce support for the euro. Yeah, but still, the euro isn't really doing anything, right? I mean, if you look at the longer-term chart, it's a very slow drift lower, and for the time being, that's what it is. So, I think you want to trade the euro. I think, there are other pairs you should be looking to trade the euro that actually, offer some better trend. Some crosses, for example, euro Aussie, euro Kiwi, etc. Question about the Aussie CAD. Yep, we can euro yen, pound yen. Okay, so let's have a look at those and then the Aussie CAD. So the euro yen, where it is, there it is. So the euro yen found support once again at 116. You can see the significance of 116 if we zoom out. So, clearly from a risk reward perspective, looking for a rebound here would make sense. Now, we remain, in a bearish trend. You can see it if we zoom out. You can see that since February 2018, this has been a downtrend, right? There's no question about it. So, bias should remain bearish, but in the short term, there is no risk reward to be bearish because we are finding support again and again at 116, this 116 area anyhow. So, you either want to be contrarian and short-term long here, or you stay on the sidelines, because if you want to be aligned with, the longer-term trend that we have, you would need some type of a rebound to get better prices to be short. So that's, a long story made short about Euro USD. And here's the pound yen, which, got rejected from that nice confluence of resistances up there, but no follow through yet. Having said that, if you really zoom in here in the pound yen, you can say that, there it is. So zooming in, you can say that we got one leg lower. This rebound looks to me like a consolidation that will probably break the downside. So I think that despite not really having, nice price action, there is, it's not trending for sure. I think that, the right side to be in the short term is probably short, for a move towards 130.60 at least. So that's what I think about the pound yen. I think looking lower in the short term is the way to go. The question about the Aussie CAD, let me address that. Having to do with Aussie and Kiwi, by the way. If you remember, I said it since the middle of last week. It looked to me like an initial big reversal ended up being just a consolidation. So I did expect this move higher to unfold. We're currently seeing it happen. Look towards 66.70 in the Aussie. You can see why. Nice area of resistance. And for the Kiwi, I would say look towards 62.60 before perhaps seeing a continuation lower. Now, Aussie CAD still well bid, still within this ascending channel. Now, keep in mind that 91.50 is a significant area of resistance, right? So if last week I drew this when we spoke about it again, I expected that we might see another leg to the upside and then at least a decent pullback. But, we're now closing the levels of that resistance, 91.50 to 92. So I don't think there is any more a decent risk reward for you to be long. If you want to be long again, I would wait for a reversal and at least a pullback towards 88.80, if not lower, 88.50. before you can consider, of course, reassessing the price action if that's a decent area you want to be buying, or if this whole rebound was just corrective. In this case, you want to be lower. So that's what I think about the Aussie CAD. Pound Aussie, Euro Aussie, questions about those two? Yeah, absolutely. Let's have a look at them. And, since we're going to be there, let's also have a look at Euro Kiwi, Pound Kiwi. So, Euro Aussie, still holding within this descending channel. I had to redraw this formation 2-3 times because, I've told you in the past many times, corrective price action is something tricky to plot since the beginning because, there are several types of correction and you never know, just from the first few days, what type of corrective move you're getting. And sometimes you don't even know if it's a corrective move. I mean, to begin with, you have reasons to assume what is going to unfold is going to be corrective, but a few times it proves that it wasn't actually corrective and you were looking at a bigger reversal. So far we're following this descending channel quite closely. Next area of support is at 166.20. I would expect that when we turn lower in risk again, which we should sooner rather than later, at least for a decent, even if we assume, let me go to the indices very shortly, and then I'm going to come back to Euro Aussie, Euro Kiwi, Pound Aussie, Pound Kiwi. So even if we assume that this was the low, and I'm going to take S&P as an example because we know that it's the risk barometer globally. So even if we assume that that was the low, the one we found at 21.90, whatever it was, I still believe that we're overdone for many reasons in the short term. So after finding a high, which I think 92.33 is a good area to look for that, or where thereabouts, we should see a very decent pullback. So when that happens, we should at least, needless to say, that there is still a chance that we're going to see a lower low in indices, right? That's not out of the question. Keep that in mind. So when that happens, I believe that at the very least, we're going to see a very decent rebound in Euro Aussie, Euro Kiwi, Pound Aussie, and Pound Kiwi. So at the very least, if this is the beginning of a much bigger reversal, and this was a blow off top there, I think we should see a very decent rebound. And in the cases of these type of pairs, a very decent rebound can be 500 pips easily. Okay, so be very careful because risk reward has started making no sense in being short, and at some point you might see like a 1 week move of 500 pips, and you being short is going to be very painful for your account. Here is Euro Kiwi. Euro Kiwi finding support again and again in this confluence, 61.8% fib of that move higher, previous high there, previous low many times here. So, Euro Kiwi has stubbornly stalled here. So I think that the next decent move from where we currently are might be to the upside and not to the downside. And here is Pound Aussie and Pound Kiwi. And I'll have to wrap it with that because I'm going to hear a guitar playing following that. So likely a blow off top there. Also broken down from this channel, but we're also approaching quite a nice confluence of supports. 190, 130 is particularly of interest to me. So, same deal, what I said before, you might see some type of a, very decent rebound at the very least before lower. And here's the Pound Kiwi holding up better than all four of those, still within this long-term ascending channel, which by the way looks corrective to me, meaning, if I had to close my eyes and do something with that and open my eyes again in months from now, I wouldn't be surprised, or even more than a year from now, 2 years from now, I wouldn't be surprised to have seen something like this. Now the question is, a type of move like this doesn't mean that it's going to start tomorrow or the day after. You know what I mean? Having said that, as I said, the pound Kiwi is holding up much better than any of the other crosses we saw, the euro or pound crosses we saw. Keep in mind that this 205 area is very decent area of support. So this might also, let's delete all that, might also first produce something like this. Okay, before we can actually see lower levels. So I expect in all those crosses, some type of a very decent rebound to unfold in the next, 2-3 weeks maximum, I would say. Probably a lot sooner than that. Dale?
Yes,
Who do we have today?
Kenny Rogers.
Okay.
You ever hear of him?
The name is familiar, but...
Yeah. Well, maybe you'll recognize him. But hi, Kenny. Welcome to Face. What's the most important advice you could give to traders, advanced, beginners, anyone? What do you say, Kenny? Well, coach, you got to know when to hold them, know when to fold them, know when to walk away, know when to run. You never count your pips. When you're sitting at the table, there'll be time enough for counting when the market's closed.
That was a good one, actually. Oh, bonus chart. Quite an interesting attempt, again, from Euroswiss. Just pointing it out. Now, we still need some distance to break this channel, but, following today's move, I'm keeping a closer eye to it. Okay, Dale.
All right, so you probably figured it out.
Yeah, I did.
A guest today.
They tell me that my IQ is higher than 80, so yeah, I did figure out that.
You know what? We lost 20 viewers within 1 minute of me doing The Gambler.
It was well worth it. It's okay.
Okay.
Their loss.
Anyway,
we've had this conversation in the past.
What?
We could have been, in some respects, more political correct or whatever. But I think at the end of the day, the fact that we're genuine, makes a lot more people, want to be here than sends people away. That's
hey, Steve, you know what? People like us. They really, really, really like us.
Yeah, I think we do okay.
All right, partner. So everyone, we'll see you for Turnaround Tuesday. I have Peter Bookvar scheduled, but he's going to be speaking at the summit, and
yes.
I may just have him just forget about tomorrow and just speak at the summit. What do you think?
Yeah, I mean, it's so close. Yeah, Peter's going to be there. Peter is a very nice guy.
All right.
He's one of the good guys that goes out on television. I mean, one of the guys that really understands economics.
People. Yeah.
Yes. He hasn't lost focus of what matters and what not. He has a very good macro view of things.
I think it's going to be a great time to have him, and I'm going to send him a couple of DMs, Steve. But since I've been talking to Peter, besides him liking the metals, where he was hiding was like an emerging market debt. Okay, so I'm thinking that the underlying currency of those bonds that he's buying might be a great discussion for him to talk about, what he sees. He
absolutely.
Likes the debt. He's got to like the currency, right?
Let me tell people that haven't read it here. First of all, we have 12 people speaking, right, during those 2 days. 10 of them are going to be producing presentations and leaving time at the end to take questions. So keep that in mind.
Cool.
2 of them are going to be interviewed. So that's going to be Peter and Peter. Peter Schiff, and Peter Bukvar.
Okay.
So that means that, especially having to do with Peter Schiff and Peter Bukvar, if you have any really good questions you want to be sending,
Yeah, think about it. You got
think about
a
it.
couple of days to.
Yeah, send them to us, and whatever they haven't answered during, let's say, the first 30 minutes of us asking them questions, we will be more than glad.
Your turn.
In forwarding your questions to them.
Yeah, you can grill them.
Yeah.
The public can grill them. So
I think it's a great opportunity. People actually pay to hear these people speak about the economy. In this case, you just have to register for free and be there and ask a question that, you know, is good and makes sense. And we promise you we're going to do the best to forward all those questions.
Wow, what a nice compliment you got to wrap up the day from Alexandros. Steve, you're the Muhammad Ali of Forex, because there was no one better. And I hope you're just as good late in your career as he was, Steve, like I am. I hope when you're old like me, you're as good as I got. How about that?
Thank you very much.
Is that a nice wish for you? Anyway, everyone, we'll see you tomorrow for Turnaround Tuesday.
One last thing I want to remind people. In order for you to even watch FACE during those 2 days, you have to register for the event. We didn't do it to push more people for the event, because trust me,
you did.
We already have more than 3,000 people that have registered, so I can already tell you that. The only reason we had to do that is because there can't be more than one event running concurrently on Zoom. So during those 2 days, the registration is going to be the same. So you're not going to be receiving during those 2 days, a reminder to join FACE or whatever, because FACE is going to be embedded in the event. The event is going to be starting with FACE. Okay, thank you.
All right, guys. So have a nice day. Don't forget that with the guys in the chat room have really been trading well, and now that FACE is closing, like the end of the day would be now, you could just go into members chat and continue to collaborate, and maybe there'll be more action later in the US session, and you could collaborate with Blake and all the guys in there that do this to feed their family and put a roof over their head. So that's it, everyone. You're very welcome, Alexandros, Sinatra, Matthew. What's a beta male? Are they have?
I guess not an alpha male. Yeah.
Oh, you stop talking about me, Matthew. You mean someone that women could drag around with a ring in their nose? Would that be a good one? A beta male?
There we go.
Exactly. All right. Well, I've been both. I'm bi. I could be either one. All right, everyone.
You're an AB male.
Yeah. And you know what? I could go
how's
either
the
way
blood types? A,
I could go either way on a microphone too. I could interview or be interviewed. You know what? I'm a Gemini. I'm flexible. So I'll see you guys all tomorrow. Steve, I'll talk to you later on, brother.
Bye, everybody.
All right. See you. Oh, don't just count your pips. Count your blessings. See you tomorrow. You could end it, right, bro?
Yeah, I can definitely do.
You got it.